Welcome, friends. My name is Avinash and I welcome all of you to another interesting episode of Face to Face Corporate Series. Friends, in this corporate series initiative, we talk to well established corporates, from established sectors. And today, friends, we have got a very interesting company. And the company's name is Alembic Pharmaceuticals Ltd. And we have the pleasure and the privilege of having the top management team. We have Mr. Rajkumar Baheti. We'll have to record it once more. I'll start from again. Welcome, friends. My name is Avinash Gorakshakar, and I would like to introduce you to another series of face-to-face corporate series. Friends, in this corporate series programs, we talk to you about established as well as emerging corporates from various emerging sectors as well as established sectors. And today, friends, we have got a very well-established company from the pharmaceutical space, and the company's name is Alembic Pharmaceuticals Limited. And we have the privilege and the pleasure of having the senior management team of the company with us today. We have Mr. Rajkumar Baheti, who's the director finance and CFO, Mr. Mitanshu Shah, who's also the head of finance, and Mr. Ajay Desai, who's the senior vice president and head of IR. So, gentlemen, thank you very much for sparing your valuable time with us today. I'm pretty confident that we'll have a very productive session and we'll get a better understanding about the company, from you today.
Yeah, thank you very much. Thanks for your kind words, and pleasure is equally ours.
Yeah. So, Mr. Baheti, one small question, elementary question, before we get into the deeper details. If you could tell us something about the business model of Alembic Pharma and what exactly are the USPs of this company, and in terms of the market positioning, if you could tell us how is Alembic Pharmaceuticals placed currently. So, if you could add some color on that.
Sure. No, that's very nice of you. See, Alembic as a company, Alembic Limited is a 115, 17-year-old company. Uh, but like a human being, a corporates also keep regenerating themselves. I mean, re-evolving and reinventing. So in 2010 or so, we demerged the core pharma business into Alembic Pharmaceutical. So technically, Alembic Pharmaceutical is now 12-year-old company, but the history and the legacy is over 115 years. Uh, the whole objective of demerger was that we focus on our core pharma business and rest of the activities can stay back in Alembic Limited. Now, what are our today core verticals? So we have four core verticals. The largest today, it was not the scene 10 years back. I mean, we have traveled a long distance in last 10 years. But today, the largest business is US generic business. The next is, of course, India branded business. And the third is the generic business for in rest of the country. And when I say rest of the world, I'm sorry. And when I say rest of the world, we mean only the regulated market. I mean markets which are like almost like US FDA requirements. The fourth and the last vertical is our API business. So a part of it we consume captively, which of course doesn't get recorded as sales, but a good part we also sell to third parties. So, I mean, the idea is to grow all the four businesses concurrently and simultaneously, and capital allocation has fortunately not been a big constraint to us. So I think, like I said, 10 years back, we were hardly there in US market. In last 10 years, we did a lot of work on research. We did a lot of work on creating manufacturing facilities, world-class FDA compliant, and we are going ahead in that journey. So as of now, apart from our old OSD plants, which are giving us the maximum business as of now, we have set up four new manufacturing facilities. One for derma products, the other for injectable products, the third is for onco products, both OSD and injectables, and fourth, of course, is a new formulation OSD facility, essentially as a, I would say, capacity expansion or as a backup to our the old formulation facility. So three are capability enhancement and one is a capacity enhancement. That's how we have traveled in the US space. we will come to the more specifics when we discuss detail. And as far as India business is concerned, that of course has been our backbone since many years. But there also, I think in last 10, 12 years, 1907, 2007 onwards, we were before 2007, we were largely in antibiotics and acute segments. In last 15 years, the journey has been more focused on specialty segments. And today I say with a lot of satisfaction that 65% of our business comes from the specialty segments. So acute, which was almost 90% at 10, 15 years back, is now 35%. And we have not degrown in acute. We have grown in acute also, but our growth in specialty has been much faster. This is how I would describe my business in few words.
Oh, fine. Vaidiji, now tell me one thing that on the US generic space, if you could tell us, what is the company's positioning? If you could share your thoughts on how the market has grown there, what is the positioning of Alembic Pharma as of now, and in future, what are the plans for us to capitalize on that market? So if you could add some color on this, aspect.
Yeah, I will start this and I would then request Amitanshu to complete this because he heads the business finance as far as the international generic business is concerned. So, see, we had fantastic, I would say 5, 6 years, uninterrupted 5, 6 years, 7 years of growth from 2015 to almost, I would say 2021 or so. Uh, One or the other products introduced by us got into some kind of a shortages, supply disruptions in US, and in most of them we made big money. However, till about 2016, 17, we were only in OSD, that is oral solid form, oral solid formulations. And we thought that to grow in this market, and we always thought the US being the largest and the most what do I say, homogeneous market is the best opportunity for companies like Alembic, which are already behind peers by 15, 20 years, if not more. So then we started building on our capabilities, as I said, in dermaceutical injectables, general injectables, and of course the onco products, because that's where maximum of new products were getting patent expiries and opportunities were there. So we had very good run for 6, 7 years, and like every cycle moves, we also currently are facing some downturn in business, not because of any of our internal issues, but largely because of steep price erosion in most generic products in US market. How long it will last, nobody knows. At least we don't know. We are too small to know that. But whether it will be the scenario forever, probably not. Or we are rather sure it won't. So things would change again. Avinash ji, you know better. US always works on supply demand equilibrium, and whenever there is a disruption on one end, the other side squeezes the affected side. So as of now, I think customers have a upper hand, and manufacturing or vendors or manufacturers or suppliers do not have much choice but to dance to their tunes. Hopefully, things should come back to some kind of equilibrium and then a upturn in some time. But Mitanshu, if you can add any specific question, if Avinash ji has.
Mitanshu ji, if you could tell us something on the US generic market, the current scenario which is there, I think Mr. Bhaiti ji said that it will take some time before supply demand equilibrium comes back again. But from your standpoint, what is the kind of outlook, at least broadly, which you can share? How quickly the US generic market can bounce back, and obviously can generate a higher demand, for the company going ahead. Your thoughts here.
Yeah, sure. So thank you everyone for taking this time out for talking to Alembic's management. Coming on to the specific question, see there is a let's go 3 years behind and try to understand what exactly happened. So it was just around the COVID times that there was a travel advisory ban, and there was need of so much of drugs, and there was a uh, kind of a chaotic environment at that point in time. Company started really manufacturing 2 shifts, 3 shifts, and shipping all the goods into America. Uh, Inventories were multi-decade high actually at a point in time. Now there is a shelf life issue as far as the pharmaceutical products are concerned, and hence what happened is that in pursuit of liquidating those inventories, uh, manufacturers started giving away a bit of a discount on the products actually. uh, as time passed, elapsed, it so happened that these discounts got accentuated because the expiries were coming even faster actually. uh, and that was the time when distributors probably thought that oh, these are the kind of environment which could persist for a longer period of time, because these are sustainable rates at which we could buy for long time. So what has happened, that scenario at one place, and the other one is that there was so much of cash flow that Indian companies, or for that matter, other organizations across the globe, uh, there was the ample liquidity to get invested into these markets, because it was generating around 30% ROC kind of businesses, right? So a lot of investments came in here. As Baitiji was saying, there used to be like 5, 6, 7 players earlier. Today, for normal generic, you will see 13, 14 players. So what has happened is it's too many players chasing too few distributors, right? And the distributors buying power is just kept increasing. They are just galloping all the businesses coming their way. The three biggest now have almost 92% of market share in America actually. So this is the current scenario. What is happening though now is that last 2 quarters we have seen price erosion being bit of abated. It's not in the range as we used to see it earlier. Manufacturers come to the terms and to the distributors and said that we have like enough blood has gone into this, and this is the base price below which we do not want to go now. It doesn't make any business sense to go below that actually, and hence the prices have found some semblance of order. Um, um, the times should come where we should see that there has to be some consolidation in industry. There are some players who have been weeded out. There are some players who will get weeded out actually. You have been hearing, I don't want to get the names of those players, but you have been seeing very large players in America beyond $1 billion sales also kind of filing for bankruptcy liquidations actually. So that is only going to give impetus to players who are strong players, who want to stray put, they want to invest in R&D, they want to get into the new product launches actually. These are the companies who stay put would generate um, decent margins going ahead actually. So that is the landscape at this point in time.
No, fine. I think very nicely articulated by you, sir. Vaidiji, now tell me one thing that we have got 4 divisions. You said the Indian branded market, the API business, the animal healthcare business, and of course the US generic market. Going forward in the next say 2 to 3 years, which will be the focus area for our company, and where is the maximum growth which you visualize, for the company? If you could share your thoughts.
Sure. So I think our focus is now narrowed down to all these four verticals. Because earlier in the old avatar of Alembic Limited, the company still exists and that's also listed. We had a small non-regulated API business also. We had some real estate development activities also. So all that is now parked at Alembic Limited. As far as Alembic Pharma is concerned, these are the four identified verticals. And I think our focus is equally high on all the four verticals. See the way companies organizes under the leadership of Chairman Mr. Chirayu Amin, his two sons are the respective managing directors for, I mean, overseeing, they are the managing directors of the company. I won't say that they are managing director for a business, but their division of work is very clear that Shaunak sits in Bombay and takes care of the entire India business, and Pranabs, who sits in Baroda, and of course, he travels extensively for business. He is the overall in charge for the international business. International business includes the API also, API piece also. So their roles are, and both the verticals, India business and the international business have completely different teams to handle their respective businesses. So, of course, marketing would be separate, but other than marketing, also supply chain, manufacturing, HR, even finance at the operational level, they're all they have their own teams taking care of their own respective businesses, and of course, the individual teams focus into is to grow their business. Going forward, see, if you honestly ask me, India business uh, would continue to be our growth vehicle as well as the funds generator. But and we expect India business to grow at least 30-40% higher than the market growth rate. So assuming a market growth rate of 8 to 10%, IPM India market growth to be 8 to 10%, we should actually easily grow by 12 to 14%. That's how our targets are set. But the big growth would come only from the US market. And I'll tell you why I'm saying this. In spite of price erosions, in spite of the current trouble, I think the future growth will come out of the newer launches which we are doing, both in traditional OSGs plus the newly set up these manufacturing facilities of derma, injectables, ophthals, etc. And some of these products, though we are very new to this market, I think we started the launches sometime in January, February this year only, and the number are still very small. Number of launches are still very small. I think they have already become, uh, they have already gained decent size. So in future, I think growth will be driven by A, as Mitanshu said, some equilibrium back into the market and prices being stable, if not moving upwards. And we have decent shares in a lot of these products. And the B is the new launches. So in last year, like we launched about 20 products, which were all conventional OSD products. This year we should be launching about 20 products, and at least 35-40% of them should be from the newer facilities. They will be our big growth drivers.
No, fine, understood, Bahiti. Now tell me one thing on the R&D side. If you could tell us, what is the kind of company's plans on overall R&D, and what is the kind of budget planned over the next say 2 to 3 years? See, because already a lot of R&D, initiatives have been undertaken by the company. But if you could tell us something, which you could share with our viewers, that on the R&D front, what is the company planning to do? How is it going to actually elevate the company in the next say 2 to 3 years? So if you can add some color on this, Mr. Bahiti.
Yeah, sure. No, very relevant and question, a very right observation. So in last few years, I mean, I would say between 2010 and 2020, we spent a large amount on R&D. So R&D, two things. One is to catch up with the peers and to have a significant number of products in the market, we had to spend disproportionately high. So our R&D spend at that time was between 13 to 15% in many years. And also company was smaller in size at that time. So the calculation that way goes little haywire. Of course, now we are settled, and now our incremental investments in R&D would be little lower because I think we have achieved a certain uh, critical mass. And now I think, but we'll continue to spend between 6 to 8% on R&D, and in absolute amount that should be around 500 crores or plus minus in that range. At the highest level, it was about 750 crores, which was again, as I said, on a smaller base, smaller turnover, was about 13-14% of sales. Now it will be brought down back to about 6 to 8% at an absolute amount of about 500 crore plus minus.
Okay. Now understood, Bahiti. Now,
But
Bahiti,
our
now,
efforts on R&D,
yeah,
just to
please.
complete this, our efforts on R&D in last many years have put us in a position where we already have more than 200 filings, more than 130-40 approvals, and leaving aside 10-15 products, most of them are in the market. We currently we have a product pipeline of almost 80 products, and as we speak, we continue to we are hopeful that we'll continue to file 20 odd products every year for next couple of years.
Okay. Bhaitiji, now one interesting question which is very important to know from a qualitative point of view. Now, tell me one thing: what is the differentiation factor as far as Alembic Pharma is concerned? We have been present in the pharma space for a very long time. In fact, US generic market has been our growth area. So, in terms of qualitative checkpoint, if you could tell us in what different and better as compared to maybe the other players who are operating here. I would believe, at least if we can give some meaningful comparison to the Indian players, if not the global players, and without taking names, if you could tell us, from what point of view is Alembic Pharma doing a better job? Like, all that obviously will get reflected in numbers going ahead. But from your standpoint as a company, management person, if you could tell us something on the positive checklist, which the company has got and which probably you think are going to be the growth triggers in the next, say, 2 to 3 years.
No, a very right question. So, at a macro level, at a strategic level, if you ask me, I'll be honest with you that we are no different. We are like any other Indian pharma, large Indian pharma company, which has a domestic business which is good and growing, and we have international business. Uh, mm, Broadly, the same philosophy that identify products which are close to expiries, develop generics from a different process, start filing, and as you get approval, start marketing the products. So I don't think on strategy or on the business, how do I put it? On the business component, we are any different from any large pharma company. Where we have tried to be different because we knew that we are behind other peers by at least 10, 15 years, if not more. So we focused on few things. And the first thing was, of course, not to make mistakes done by others. I can always make new mistakes, but I won't repeat mistakes which were done by others. And how it helped me. I think touch wood, it can happen any time, but touch wood so far, you look at our FDA records, and it has been amongst the best in the industry. We are, of course, new also, but amongst the best in the industry. Uh, in all the last 10 years, there have been observations. Of course, there have been 483, but they were very promptly and very nicely addressed. We got all EIR in place. Not today, even earlier. Now, today, with additional facilities, we still can make a statement that all EIRs in place. How did it happen? So, I think we learned the hard way by from others that there is no point in doing shortcuts. In US, if you have to be patient. You can make mistakes, you correct it, but don't be in shortcut and don't suppress. So when we as a company, we never had a data integrity issue. We never had so nobody disbelieved our genuineness. I mean, and I would say that's a huge success for behind our performance. So that was one focus area that you have to be compliant and no shortcuts are needed. And if you have made a mistake, fine, accept it, correct it, and move ahead. The second is we always focused on supply chain nimbleness. So while everybody has every product in the basket, largely, I mean, every product would have 10, 15, 20 generics. Where I think we scored over our peers was our team could identify an opportunity ahead of competition, and we were quick enough to make sure that the product is available in US market ahead of others. Now, this taking advantage of a short-term shortage and then putting the product in the market ahead of others, it has also been our one of the success factors. So our focus is more on execution rather than on strategy. On strategy, I think I won't claim anything beyond. Where I'm little lacking still is on innovation, on real innovation. So a lot of my peers, after having being very successful in generics, have started the efforts in innovative products, and some of them have reached achieved the initial success. Unfortunately, our investment and capabilities both on innovative products have been little lower. We tried this through an associate company called Rygen Pharmaceutical. They achieved a very good success in initial period, and we were very happy that it was from a first Indian company a product to have hit the market, an innovative product. But unfortunately, US FDA took a macro call to ban certain class of products, and our product fell into that class. So that product was also banned. So that is where we have lagged behind, and that is I gave you a couple of examples where we have been little ahead of competition.
No, fine. I think Baheti very well articulated. Now tell me on the financial side, Baheti you as well as Ajay I would like to ask you also a small question. See, the last year's performance was slightly subdued. I think we saw profits coming down. Revenue, of course, grew at a reasonable pace. Now tell me, what was the key reason for a subdued performance, Baheti for FY23? And Ajay if you could add, your thoughts like in the first quarter, I think numbers have been pretty good. I mean, if you see the quarterly EBITDA, the revenue, and the profit after tax numbers have improved. So, if you could share your thoughts and tell me that what exactly happened in FY23 and in quarter one, the kind of bounce back what we have seen. Can we assume that this bounce back will be sustainable for the next, say, 2 to 3 quarters of this financial year? Broadly, what is the outlook for FY24? If both of you can, answer in bits and pieces, that would be good.
Sure. So March 23, very clearly, I mean, there is no argument with your statement that our performance was subdued. In fact, you have been generous in saying so. I mean, for internally for us, it was very disappointing. But I think what made us little, I mean, what was the consolation prize? Consolation prize was that we still did all good things which we were supposed to do as a company. As a company, I have no control over market. I have no control over pricing. And that is where we got the beating. Almost every Indian company got the beating, depending on their dependence on the US generic market. But our performance looked more subdued in relative term, because prior to that, for 2 years we made huge money in sartans. Now sartans were not a great product till about 2019-20. Okay, I mean, it was a commodity product selling at almost no margin. Just companies were recovering their overheads and selling it. All of a sudden, there was this FDA raised an issue with the China API manufacturer. All those is history, and all of a sudden, sartans went into a big shortage. We had our own API with no impurities, and that gave us an advantage to grab those sartan market at, I would say, pretty high prices. So both the turnover and the profits were very high because of those. And mind you, Avinash, at every meeting with investors, I was making this statement that these are not likely to be sustained. The numbers will come back once the people come back in the market. But ठीक है, जब तक opportunity है, तब तक no harm in taking that opportunity. Yeah. So it would not have looked so bad had it not been such a great years prior to that. But that's one point. Second point where we suffered the most is due to the COVID, etc., and travel restrictions, not restrictions, I would say travel prohibition. Our facilities, after getting completed in 2019 or so, was not inspected. Once inspected, then repeat inspection was not done for almost 3 years. And this delayed the whole approval process for my new facilities, and this delayed the whole what do I say, the whole approval, launches, etc. And that derailed my uh, entire business plan. But this is life. I mean, COVID has had many casualties, so our business plan was one of them. uh, both these two factors together, actually, we lost a lot of ground. We lost a lot of time, unfortunately. Hopefully now things are going back to track. uh, Post inspections, post COVID inspections, we have got all observations cleared. We have got the EIRs. The plants have started manufacturing. Products are getting launched. It may take another year and a half, 2 years for us to get to a reasonable size out of the new facilities and start making money. But I think the beginning is not bad.
Yeah.
Ajay.
Yes. So, yeah, good afternoon. So basically, if you look at both the businesses has done very well in quarter one, and particularly on the India business side, our growth was ahead of market growth, and it is across all the therapies. If you see anti-infective, cough and cold has done great. Like acute segment, we grew at 16%, whereas even on the specialty side, particularly on gynecology, nephro, uro, opthal, everywhere we have done well, including our veterinary and poultry business, which actually is doing very well over the last 5 years period. So, and the best part of our company is, India business is that we have a well spread portfolio. So our portfolio structure, if you look at it, nowhere we are over dependent on any particular therapies. And the spread what we had, like gynecology, cardiology, gastrology, or anti-infective, or even vet poultry, everywhere it is like roughly 15%, which gives between cardio diabetes 20%. So all put together, if you see, we have a well spread portfolio across growing among all the therapies, and that gives us confidence that we will continue to do what just now Behti sir said, like uh, our growth, we are confident of having growth better than the market growth by 30-40%, so yeah.
Okay. One question which I wanted to understand is that, in the first quarter, the company's API business grew very strongly by almost 31%. Now, what kind of business growth does the company expect going forward in FY24? Because, APIs were under severe pricing pressure. I think API business has grown for you. So, Behti ji, if you can answer this question and, tell us and enlighten us that, what exactly is the outlook for the API business? Because, currently what I hear is that prices are stabilizing and your business has grown by almost 30% in the quarter one. So, for the next, for this coming current financial year, what is the kind of outlook which you would like to share?
So we have said this in the past, and I would tend to be conservative, and I would say that our own growth expectation is between 10 and 15% as far as API is concerned. Because if I mean any business for that matter, you can't look at always a quarterly comparison because you
Yeah,
supply one big lot to a one big customer, and that quarter
exactly.
number looks different. But I think we should be consistent in both ROW and API business. A 10 to 15% growth should be a good performance if it is consistent. Domestic, of course, we have said the only piece where we can't predict is like US market, because that's a large market
Right.
and that's something where it's almost impossible to predict. Uh, and that's the region that most pharma companies, I mean, except who have very large base like Sun Pharma, etc., don't give a guidance. It's very difficult in pharma to give a guidance, particularly if they are a large player in US generic market. The
Okay.
only statement we make is that probably, hopefully, the price erosion, if at all it continues, will continue at a lower pace, and that should be offset with our new launches. I mean, what could have been
Okay.
a net increment probably will offset the erosion. If the erosion stops, or if we get an opportunity to raise prices again on some of the older products, then growth can be phenomenal.
Okay. No, understood. I think, Baheti ji, very balanced reply from your side. Now, just one more question on the margin side, without putting a number again, just kind of, outlook which you can share. Can we expect the kind of EBITDA margins what we have shown in the first quarter? Can these be sustainable? Because, that is what the market also would like to know. Typically, are these margins sustainable? And clearly, are there any headwinds where possibly some raw material price pressure may come in, or maybe some other, contingencies may come in? But are you confident of at least maintaining these margins at least for the next 2 to 3 quarters? That is for FY24.
So 2 to 3 quarters is okay. So I'm just giving only one exception, and other than that, I think we are very confident of maintaining these margins. And that rider or that exceptional statement is that now in this financial year 23-24, the entire overheads which I'm incurring on my new facilities, I mean we call it F2, F3, F4, is getting charged off to P&L account. Okay.
Okay.
Whereas the revenue from these facilities, as I said, is still low. I mean, it has not reached to
Okay.
a critical mass. So that will have on a standalone basis, that would have an impact on our margins. Keeping that apart, I think the rest of the old business, API, India business, and US OSD business should give us decent margins. So
Okay.
I'm not speaking for Alembic Limited, but Alembic Pharmaceutical rather, but I'm speaking on behalf of industry. When companies of our product mix and companies of our size should be happy if they are between 15 and 20% margin. When those
Okay.
margins of 30% plus kind of things, that is now history.
Yeah.
And I don't
No, no,
think
I think
I don't expect it to come back very soon. I wish it comes, but I don't expect it to come back very soon. But if you are in that 15-20% margin band, I think you are doing a good job.
no, I think Baheti very well explained by you. Tell me one thing. You mentioned that certain investments have been made. The full revenue impact has not come in on your books. So can we expect some sort of operating leverage benefits, to kick in over the next say 1 to 2 years? Will that benefit come to the company?
Yeah, by March 25, I mean, in financial year 24-25, I think we would have decent number of products in the market from these new facilities, and that should not only recover its overheads, that should also contribute positively to the overall company's margin profile.
Okay. Mitanshu ji, one small question to you. On the US generic market, since you track it very closely, I mean, in your sense, can FY25 be a kind of a much better year as compared to the current year? Because I believe you mentioned that, even today the demand supply equilibrium is still getting slowly accommodated. So, in your sense, now since normalcy has come in, we have seen, there are no abnormalities like COVID, which you mentioned earlier in your statement. Can FY25 be a good trigger kind of year for the company? Because, as Mr. Baheti also mentioned, we'll have a lot of new products also launched. And plus, the US generic market is a very large market. So, or FY25, can we assume that growth will come back again and, it will be much better than at least the current year? If you could share your thoughts, please.
Yeah, I mean, it's always, it helps to be positive, right? So, and I think, what you say is in this festive atmosphere where Ganesh ji is there, actually, he blesses us with better quarters and better year next year. Uh, Tangentially speaking, I think what you're saying is right. I mean, if we hear the commentary of most of the generic players, they are seeing that the kind of price erosion that they were seeing is completely kind of, it's kind of getting abated. New launches are getting good traction as we see. So there is some bit of, semblance getting back into the market. If it's very important to see this, how does the new launches actually perform? Because the base business is something that you cannot expect a growth um, manifold actually. It's only new launches which is going to, and if you look at the patent cliff, there are so many products which are, and there are some opportunities on 505 B2. There's some, platform technologies for a lot of companies. In general, I'm talking about should start seeing come to the foray from H2 of this year and then the next year actually. So all of this should bring in a decent sort of growth for the generic players in general actually. What, although they have to be careful, is FDA has started audits, and audits are happening thick and fast actually. So they have to keep the houses very clear. They have to, and they are coming up not only in the older arena of looking at the data integrity, they are coming up with, lot of new tools. I mean, and managements have to be very clear of keeping their houses clear. I think if they keep nimble supply chain. If the QA audits are being taken care of, well taken care of, I think opportunities are there for the companies to relish in the coming years, actually.
No, fine. I think thanks a lot for the answer, Mitanshu ji. Now, Vaidhi ji, now one question I wanted to ask you. Your average working capital cycle has been slightly elongated. I think inventories have been on the higher side. Now, any possibility that going forward, at least FY24 or even FY25, can we expect a better, tighter working capital cycle for the company? Because inventories have been taking a lot of your operating cash flow. So if you could, share your thoughts on this point, please.
So no, you are absolutely right. I mean, we also realize that, but I'll make two statements. One is as far as India business is concerned, our working capital is amongst the best in the industry, if not the best. My receivables are 26, 27 days, India business. My inventory is also less than 3 months. But when we look at the international business, this higher inventory in the past has given us phenomenal advantage over the peers. I mean, we were so there is a you know a bit of complacency as far as inventory control is concerned, because you believe, yeah, I mean, you have made money in the past. I mean, no harm in keeping a bit of extra inventory at 7% interest cost, and then you, if you get opportunity, you recover this. Having said that, higher inventory has its own problems apart from the financial loss. So we have been focusing on it. But one reason, Avinashji, why our inventory for the international business has been high is we were in midst of putting up multiple facilities with different dosage forms, different products. So you need to have a threshold of inventory for each of these facilities. Even if the product launch is a bit away, you can't keep your raw material powder dry and then start. I mean, still do the launching. So some of these mismatches will go away hopefully towards the end of 23 24. Towards the end of it, some of these mismatches will go away. It will be more balanced, and I'm sure inventory will come down as a number of sales, not in absolute amount, but at least
Yeah.
number of day sales. As far as receivables are concerned, even in US, or for that matter other businesses, I think our receivables are well in control. I don't think I have lost even a single rupee on bad debt as far as receivables are concerned. So uh, uh, inventory is a right concern. It's a concern for us also, not a concern, but an area of focus for us also. That you
Yeah.
can't you can't afford to have an inventory like this forever. It has to be controlled.
Yeah. No, no, I think
But very
understood
good
very well.
observation you have.
Yeah. Vaidyaji, last question now. Every business has got certain risk attached. Now, in our business, we are a globally centric company because, US generic market is a very large market for us. Tell me one thing, in your years of experience, what has been the single most risk? I mean, if we leave alone COVID, COVID was a universal problem for every company. But then, what is the major risk for our company? And typically, what is the kind of risk mitigation strategy, over the years as a CFO you have developed, and you have ensured that, the company grows despite all these challenges. So if you could add some color on this.
So I would make a more on the earth grounded statement that as CFO, against all risk factors, my first goal or focus is to ensure, to make sure that the company survives. So to continue to grow is a little bigger statement. I will hold back on that. But when you say or talk of biggest risk, yes, we also keep our risk. And I mean, there is a, of course, that is also required by law. But we have a very serious risk management committee, and we keep deliberating. So I will not name fewer multiple risks which are like standard in an IPO document comes, and everything in the world is a risk. But I think major risk which any pharma company faces, including ours, is FDA compliance. I have to be I have to be 100% compliant at 100% of the times. The moment I falter into this is a huge risk for us, particularly for us because we are a small company. Plant remaining
Exactly.
shut for 6 months or 9 months to just address FDA concerns will be a disaster for the company. And
Exactly.
that's why I said so far, touchwood, our execution has been good, but we have to continue the same vigil. So one is, and the second and an associated risk also is, I'm a proud Indian. I should not say that, but culturally, it takes a lot of efforts for us to tell our all the employees that compliance is top priority and you don't do shortcuts. All bhashans are done, But at the end of the day, people are so accustomed to do jugadu thing in India that I
Exactly.
mean, you don't know whether you are controlling it 100%. So I think the training and reskilling of your manpower is at most important, because
Okay.
most people with no bad intention, with good intention, they try to do something which is not in the rule book. And
Okay.
you need to tell people again and again and again that you have to only follow rule book and nothing beyond that. So I think training and continuing development of your manpower resource is the second biggest area of focus or area of risk. I think other than that, the forex risk, raw material risk, I think those are very temporary. We can always manage that. But the
Exactly.
only these two things can take you down the hill if you are not very careful. But
I think
Mitanshu, from your perspective, if you wish to add, because this is the last question and the last opportunity.
No, no, I think you have summarized quite well, actually. So, yeah, I mean, nothing more to add on that.
so I think Bayati ji, Mitanshu ji, and Ajay ji, I think all of you answered the questions very well. In fact, we could understand in a very good way what is the overall thought process of the top management team at Alembic Pharma. So my good wishes to you, your entire management team, and best wishes for your future performances also. And we'll do keep in touch with you over the longer term. Thank you very much.
Yeah, thank you very much. We count on
Thank
it.
you.
Thank you.
We count on your